Hi everyone, and we are back to action finally after a month and a half of not having any positions. I just closed the position for 45% profit on the credit. On silver, it was a triangle, and also have a natural gas position with a low delta. So let's go over these positions. And currently, I'm actually up about, let's see here, about 12.48% on the account. And currently, I don't really have too many trades, and the only open trade that I have is the natural gas trade. This is the silver trade that I closed. It was just 3 days in duration. I was really low delta, and the reason I opened the position is basically because the tariffs were paused for 90 days, and Mexico is one of the biggest producers and exporters of silver in the world. So I expected volatility to drop. Now it dropped way quicker than expected. And just 3 days, I closed it manually just because of the long weekend. 45% in 3 days, I'll take it. The take profit was at 50%, but 45%, it's very respectable. And this is what you see here. This is my trading academy. So this is where I basically post all my trades live. People copy trade, learn. So if you're interested to join the academy, please email me in my email address in the description below. But this position was 106 days to expiration, open on April 13th. So it was actually a Sunday when I opened it. So Sunday evening, as the market opened up, got a pretty good full price. And this is the profit target, and this is the range that I got for my short strikes. Now, this is a bit of a different position than what I usually do. So if we take a look at silver, so I opened it it was a Sunday actually, but there is no Sunday on the graph here, but I opened it on Sunday, and just a few days, and we're out of the position, and the range was pretty massive. So I did expect for this position basically for the price not to get to any of the strikes. The price have been moving within this range for well over a year, and probably even more. We just don't have the data here. This is the reason why I chose these strikes. This is again a bit of a different position than I usually do. This is a position that takes advantage of volatility and crashing down. And also, I was really small on the contract size and on the position size, just to allow the margin expand if it comes to it. And as you can see, I opened up the position right here. Well, it says Monday, but again, we don't have a Sunday here, but volatility was probably somewhere in between, and you can see volatility just completely dropped all the way down, and I was able to close the position very, very, very quickly for 45% profit on the credit ahead of the long weekend. Now the second opened position that I have is currently natural gas. Now, same story here. Natural gas is usually more volatile during the winter times. As you can see, it's pretty sideways during the summertime. Then we have some crazy movement during the winter. So right now, obviously, winter is about to be over with, and temperatures are rising. So it was a pretty good time for me to open a position. And plus, I chose those strikes because the natural gas was within this range since, I think, since at the end of 2013, so quite a few years. And obviously, again, this is a position that I expect to profit somewhat quickly. Currently, this position is up about 20% of credit, which is again quicker than expected because volatility dropped a little bit, and volatility was actually not too crazy here, but this is just the seasonality for natural gas. And when things get warmer, this is where usually you can get into a really good trade. And these trades are a bit different from what I typically do, and this is just because of the market conditions. And at the end of the day, it's all neutral trading, it's all strangles, and I'm just using different tools to my disposal, or I'm using these tools to my disposal based on what the market kind of brings me. So yeah, volatility went down a little bit. It was actually on the high end if you look at this period over here, and I don't want to look, I don't want to compare the volatility to what is happening over here, because this is the really, really cold months. And then we have volatility basically going sideways within this channel from here and all the way to the top here. So volatility was pretty good as well. And again, this volatility over here shows it's for the front month of the future, which I don't trade the front month. The month that I trade is actually one of the other months. So volatility might be quite different on the other months, but still this is a pretty good benchmark for me to look at to make sure I get a pretty good volatility when I enter the position. So currently, I have been requested to kind of make things more organized. So I think this is pretty self-explanatory and organized. Up about 12.48% on the year, realized and unrealized. So all the positions are closed other than the natural gas position. And you can see basically January was a pretty good month. February was as well. March I haven't traded at all because of the tariffs, but there was still a bit of profit because I bought some T-bills and I buy them every month. So far so good. The total margin that I use currently in my account is about 3.64%. So very small, and natural gas doesn't take much margin. Now these positions are 106 DTE, so quite a bit of days to expiration, and just again because I wanted to get the good credit and the good range. And so far not too many trades this year, just six trades, 7 trades. I guess the 7th trade is still open. So 6 out of 6 wins, all winning months, and nothing too crazy. And let me know if you want me to add any more details to the spreadsheet. Try to kind of keep it as simple as possible. And there's all the reasons for my entry for each and every position, and reason for early exit. Same thing will be for silver over here. And then there's obviously reason for entry. Yeah, I forgot to put the reason for early exit, but I think it's probably on the academy here. Like a reason for early exit is almost reach profit target within 3 days, and the long weekend is coming up. There's no point in holding the position through the long weekend for just an extra 5% profit. So this is basically it. Let me know if you have any questions, and I'll try to share more and more of what I do. And the full course is coming out probably in a week or two, where basically I show everything that I do. And that's about it. And again, if you are interested in joining the academy, check out my email address below. Just email me. It's pretty beneficiary for everyone. And actually, I forgot to put how much is the SPY up year to date, but it's something negative, of course. So been doing pretty well this year, about the same pace as every year, and my positions are pretty small. I can definitely increase position size a little bit, but it is what it is, and I'm taking whatever the market can give me. So thank you so much for watching. If you have any questions, let me know, and I'll catch you in the next one.